Started.
Sounds good.
This is the Know Your Numbers podcast, the Better Books broadcast, and I have with me a dear friend in John Krause. He is the founder and owner of StarVox Capital, a lending institution down in Bloomfield, Connecticut, but he's also a registered lender in a couple other northeastern states, including, correct me if I'm wrong, Massachusetts and Rhode Island.
Mass, Connecticut, and New Hampshire right now. Soon to be Rhode Island, though. Soon, very soon.
All right, yeah, we're expanding, so that's why I have them on here.
And Florida, Florida's coming too. Yeah,
and
that's
Florida.
Actually Florida. I took all my stuff for that's ready to roll. I just need to get that approved, and we're good to go there.
Yeah. So I guess that's a good place to start. Is what does it take to lend, and what makes you registered in those states, and how do you go about doing that?
Sure. Yeah, no, thank you again for having me on, Chris. I appreciate it. Always a pleasure chopping it up with you, with whatever it is.
Yeah.
But yeah, so I'm a mortgage broker for commercial, right? So there's two separate things. It's like two separate heads. Some guys work for a mortgage broker and they can do all of it under one envelope. So for me, I chose to open up my own thing with the commercial stuff. That way I didn't have to work for somebody with that, you know? So with that, I can do business anywhere other than maybe like 2 to 3 states that have, you know, weird, funky laws and regulations that maybe I have to have brick and mortar, like I have to have an actual location there. But for the most part, I can lend for that stuff without a license, and with any state for all commercials, because I'm technically lending to businesses, right? We're lending to people that buy rental properties, you know, 1 to 4 unit rentals or 5+ unit rentals, or the Airbnb stuff. I lend to people on that for the fix and flip, for rehabs, and all the commercial stuff, so on and so forth. So I don't lend my own money. I've established relationships with probably, I don't know, 20 or so lenders in that space that I know and trust their process and what their, you know, what programs they offer. Everyone, I've got a spreadsheet that says lists all my lenders on what do they do. You know, this lender may only do fix and flip. The other lender may do all of it. Some of them just do rentals. Some guys just do new construction, ground up. So I've got a place or places to take clients based on their qualifications, their experience, and all those things that we look at. So that's one bucket. The other bucket is the, like you said, I'm a registered mortgage loan originator, which is on the residential side. If you want to buy a house in your neck of the woods in Massachusetts, and I want to be the loan guy, the mortgage originator for that, I have to have a license to do that, a national registry license. So it's something that back in 2008, all things changed in the mortgage business. I mean, it hit the fan, and rightfully so. There were some things that were going on that were not good in the industry, and we all felt it. So now I have to have a license in those states. So I can choose to, you know, I'm licensed in Connecticut. So that was the first place that I got it. In a lot of states, believe it or not, have a reciprocation with the state that you go. And all you really have to do is take like an hour or 2 hour, 3 hour course, and then you're licensed in Mass. And then you do the same thing for Rhode Island. And so I've chosen right now for Connecticut, Massachusetts, New Hampshire, and then soon to be Florida, Rhode Island, and probably Texas, and other states. So I may just start, you know, just as where I find my core group of people that I'm working with seeming to expand, the need to be licensed with that way I can help them with their things in the relationships that I'm building with real estate agents across the country. I want to be licensed in those states to be able to service their clients. So in a nutshell, that's kind of what it is. I'm a broker for commercial and resident in commercial and business stuff. And I'm a loan originator for a company for the rest.
Okay. And so the loan originator is, you're writing the loan and giving that to a bank, or how's that work exactly?
So I work for that. I work directly for a bank. I work now directly for a lender, for an actual specific lender. I work for them. I don't get paid. None of it's salary. None of it is. Anything you do salary, you know, is a joke in my opinion. Unless they're paying you salary plus a lot of stuff. But so again, it's more like owning my own business, because I have my own branch with them. Which again, I may start my own physical branch here in Connecticut, but still I can be licensed in multiple states to do loans out of that branch. So yeah, I work directly with one lender who we've chosen. I have a team. I have processor. I have my assistant. I've got underwriters. We've got all this thing built that helps streamline that process for my clients.
That's awesome. And so when you're looking to give a loan to someone, are you focused more on the actual person, or do you care a lot or at all about the property that they're looking to buy, and how's that play out?
Depends. I mean, you always have to understand the person and what their experiences are. I mean, that's, and it all depends on what side of the business we're talking about. If we're talking about, like, someone buying a house to live in, then it falls under, first it's not so much the house. It's really comes down to them and how much they make and what their debts are, because we run their credit, what their credit score is, how much money they have in the bank or in retirement to kind of put down on a home. So that's that side of it. And then afterwards, after we pre-approve them, then they go and shop for houses, right? Then they go with their real estate agent, they shop for the houses, they find a house, and as long as it fits within their loan program that we've pre-approved them for, then it's a pretty easy thing to make happen. On the other side, it's a little bit about the person. We don't look at their debt, and that's maybe another conversation. We can really dig deep into the differences. And maybe it's this conversation, but the difference between this is we look at the client and this is for the commercial stuff. We look at the client. They have to have the right credit score for different programs, right? They have to have money, right, to buy one of these investment properties. We look at experience and what have they done in this world? Have they owned other properties like this? Have they done flips before? So these are the things that they look at. And obviously, I don't know if I already said it, but they have to have money. But then it kind of switches gears, because we have to also underwrite the property. In terms of, if you're going to do a flip, right? You're going to buy a house to rehab it, to flip it, to make money, right? You have to know, and I think that's the topic of this. You have to know, as an investor, you have to know your numbers. You walk into a house and you're like, all right, well, John, I want to buy this house. It's $150,000. And I think it's going to cost $50,000 to renovate, right? And when it's done, it's going to be worth $300 or $350, right? So that number that you must know, there's two numbers you must know: your budget and how much it's really going to cost within reason, for renovation, and really is how much is it going to sell for? What's the market? But so those are some of the moving parts that we need to know. So when I pre-approve somebody on that side of the business, yes, I want to make sure they have the nuts and bolts to fall into one of the loan programs. But then I explain to them, there's another half of this. You could bring us a property that just doesn't work, that you just shouldn't buy because the numbers don't work, period. And it's not just for me in the lender, it's really for you, the client. You don't want to go ahead and jump into a property where you may not make profit margin, right? So there's a little bit different look at each side of the business, and how we have to look at each deal separately.
It's interesting. So when 2008 hit, the problem was that people in your position were lending to people who didn't know their numbers, and they didn't really care if the property was profiting, right?
And not even on that side, the property profiting. The problem was back then, if you had a heartbeat, you could probably get a loan, just because mortgage guidelines were just so loose. I remember, loan parameters of, you could have a 580 credit score and you could get 100% financing. See, the problem is a lot of these people got 100% financing, and a lot of people couldn't afford it after the 2 year, because it was only fixed. The rate was only fixed for 2 years. A lot of times. The good mortgage brokers would say, no, I know it's going to be a higher rate, but I'm going to put you in the 30-year fix. That way in 2 years, you can still afford your mortgage, right? A lot of people didn't do that. They're like, well, I want the cheapest, and I want, the best, lowest rate that I could possibly get. And at a 580, those rates were like 7% or 6%, and that at that time was still not bad, because like, I think mortgage rates conventionally at that time were like 5%, 5-6%. And that was really good at the time. But remember, you can get a 5 or 6% for 30-year fix because you have really good credit.
Mm-hmm.
But with not so good credit, you were getting 5 or 6%, but it was only fixed for 2 years.
Okay. Yeah.
So after that 2 years, it became adjustable.
Yeah.
And every 6 months, your rate adjusted, and it never adjusted down. It always adjusted up.
Right.
So that was the big problem, was people were biting off way too much more.
Mm-hmm.
They couldn't handle the payments.
Right.
And there was other crazy programs out there, like interest only programs, and you had option arms where people were could choose kind of what payment. It's kind of like that book, Choose Your Own Adventure, like you pick which path you go. That's kind of what they had the option to do every single month. Well, this month I don't have the money. I'm going to pay interest only because it's the cheapest. But little did they really know, or maybe they did know or didn't care, they were adding what's called negative amortization on the end of the loan. So they were not paying off any principal. They were just adding and adding. So it was just a bad scene.
Yeah.
And that's just to scratch the surface, not even talking about stated income. I mean, you could be a W-2 wage earner back then. So Uncle Sam, you could give me your W-2. I mean, you should, this isn't how it should have gone, but you could have given me your W-2, and a loan officer could have put in a higher number, which doesn't make any sense.
Yeah.
But there was things, and not everyone operated like that, but there was no regulation behind it.
Right.
It was just like, well, if I can squeak it by the lender, it was it was shady. There's a lot of people doing shady stuff. Me, for instance, when I was in that business, I don't think I did one of those loans. I was always more conventional FHA. It was just the clientele that I had. I didn't mess around with the subprime stuff.
Right.
I'm call it lucky, call it whatever.
Yeah.
That stuff just frightened me even at the time. I don't know if it's my moral compass or what, but it was bad. It was real bad.
So you could tell though, like the people that were involved in it, they were either blind or greedy, right?
I mean, I wouldn't say they were greedy, because there was people writing those loans.
Yeah.
It was available.
Yeah.
They were legit loans. I mean, the stated income really should have been designed for the self-employed person.
You're right.
Someone who you and I both know, you're in the business. You're in the business of working with self-employed people. They grossed, 350, but they netted 35, right? You and I both know that there's a crap ton of write-offs in there.
Yeah.
So they really did better than that. So some of those stated loans back then were legit for those guys, right?
Yeah.
But when they were doing stated loans for people that actually had a salary or an hourly pay, that's really, and it's not the loan originator's fault that those programs were out there. It's the lenders.
Right.
That they should have never had those programs out there, because those were not good.
Right.
Not good.
Wow.
We call it the Wild Wild West. Anyway, I call it the Wild Wild West, because it's just hey, everyone gets a loan. You get a loan. Everyone gets a loan.
No problem.
I remember this dude. He bought this house it was in Connecticut, and he was in the mortgage business, and I'm like, how are you affording this house?
Right.
I've worked with you. You don't make that kind of money, but it was one of these funky programs where I think it was an option arm where, whatever, I'll just pay interest only until, it forecloses or something. I don't know. It was crazy. Yeah.
Wow. And where is that guy now? Do we know, or should we not talk about it?
No, I don't know. It's not that I don't talk about. I just don't know. I remember, because when that hit the fan back then, I left the business. I was actually working for a lender, because I switched from loan originating to lending. So I was working for a lender, and I saw the writing on the wall. I was like, all my appraisals are coming back where the value wasn't there, because that was the other thing. All the loan originators were able to refer directly to an appraiser, and these appraisers, and I'm speaking in general, were really they were kind of reliant on these loan originators to send them business. So, all right, the purchase price is $350. Well, the house sold a week ago for $200. I'm exaggerating, obviously, but miraculously, when the appraisal came in, it was at $350. So, obviously with exaggeration, the values just kept going up and up and up, and it was just false. It wasn't real values. It wasn't true. It just wasn't true, and that was another issue too. So I saw all my appraisals coming in. Like all right, it's not working. So I got out. I got out of the business. I got out before it actually crashed.
Yeah.
And I told myself I'd never, ever get back into the business again. Because I'm like, this is crazy. I don't want to deal with this ever again.
Right.
You know, because we were all making good money back then.
Yeah.
And to have that rug pulled out from under you, making great money and then making nothing. I mean, it was almost like having that W-2 job and that salary job and just getting fired and laid off. It was like that abrupt. There was no slow decline. It was gone. It was gone. Like all the different lenders shut down. Even the big lenders, you know, big lenders, small lenders, it got bad. So I told myself I was out, but we've talked about my story about that. You know, I got back in. Back in.
Yeah, but where the stars align and the grass is greener today, so that's good to know.
Oh yeah, no, all the changes that they've made have been made for a purpose.
Yeah,
you know, a lot of people complain about how strict and how regulated it is, but you know, it's for a purpose for sure. And for the most part, there's things that there's still issues with, just hassle. But for the most part, you know, you just do your thing.
Yeah,
follow the rules. You make money. Everyone makes money. There's no need to be greedy in this business. Everyone makes a little bit of money.
Yeah.
So.
Yeah, that's good. And that kind of takes me to another point, is that real estate is a very opportunistic industry for just about anybody and anybody who wants to get involved. But how could a guy, you mentioned the self-employed, how could an entrepreneur or somebody like myself just getting started get their foot in the door? And what would you look for as the lender in somebody who might not have that reliable W-2 income, but is looking to get involved and has the ability to create income in a way?
Well, I mean, it depends on what you're talking about. If you're talking about you trying to, like a guy like you just wanting to buy his own home, you know, there are ways to do that for a self-employed guy. There are ways to do that where you don't have that W-2. It's a bank statement loan, you know, so we take and look at your deposits on your bank statements for 12 or 24 months and that they qualify. It's almost like, all right, listen, we get that you made way more money than this and you're producing money. So we're going to take your bank statements versus your tax returns instead of looking at that 35 grand net. Now we're able to take those bank statements and say, all right, they had, you know, $200,000 in deposits this year. And then maybe we'll give you 50% credit on that, you know? So again, it helps the self-employed person get in, which makes sense. Those make sense. So that's on if you're trying to buy a house to live in, right? If you're trying to go the other side of it and you really want to like break into real estate, I think the way to do it is obviously, you know, you don't have to have experience. There are lenders that I work with that will work with you with no experience. What if you're trying to go at it on your own 100%, you're going to need to have money in the bank. I mean, I do have some lenders. I just hung up the phone with one of them right before I got on your call. They'll do a 100% financing, and you may have to have some experience, but this is something crazy, 100% financing on a flip. I have a couple places that will do that. But usually they want like to cross collateralize like one of your other properties, which means put a mortgage on that other property while you're doing this one. So, which is fine. People do that all the time. But somebody that's never done it, you want to have money in the bank. You have to have money in the bank to do it. You know, what I recommend is partnering up with somebody that has done it. You know, say, hey, listen, I'm really trying to break, like, and it comes to networking, right? You're networking with the right people that are getting involved in deals. Maybe you say, hey, listen, I found a deal in my neighborhood and I really want to take this thing down as a rental property, but I've never done it before and I need your guidance. Let's go 50-50, or you negotiate some kind of terms with that guy and say this, let's do it together. That way, now you're going to get the experience. And now you'll have some income from it, whether or not it's going to be a income producing property like a rental or an Airbnb, or it's going to be a flip. I mean, there's ways. I mean, some people get into the wholesaling side of business too, and that's another conversation. I'm not in it. I don't know that side all that well, but essentially what they're doing is they're finding people that own distressed properties and they're negotiating a price that, like, say you have a distressed property. Hey, I would buy that from you for $100 grand. Now I'm not buying it. I'm going to somebody who's going to do something with it. I'm going to go to, like, you know, somebody who flips,
Yeah.
say, listen, I'll sell this to you for 125
Yeah.
or 110. And
Mhm.
now I make the split when that actually closes, right?
Right.
So there's ways that you can get money and do it and get knowledge, but it starts with this. It starts with networking
Yeah.
and getting around people that are in the business and learning.
Right.
Because
Yeah.
so far, I mean, I've been in this business for a little while now, but
Mhm.
people are usually generous with their knowledge.
Yeah.
Nobody's usually like, no, I don't want to share that. Because
Right.
there's enough, it'd be almost like somebody in your business saying, I can't give you that advice
Yeah.
because got to keep it close to my chest. I mean, it doesn't make sense.
Right.
There's enough business out there, right?
Yeah.
So yeah, get with somebody that knows the business
Yeah.
and you can learn from, or multiple people,
Yeah.
but that would be the one thing I would recommend.
Gotcha.
But if you have the money, there's ways to get it done. There's ways
Yeah.
to get, there's ways to get financing for sure.
Yeah. Wow. That's cool. And now, John, do you have any investment properties of your own, or
Nope.
no,
Nope.
just the lender?
At some point, I mean, that's at some point, yeah, I'd like to have something or
Yeah.
some, but right now, my goal right now is to really create my own mortgage fund for short-term
Mhm.
rentals. That way we can lend out of StarVox Capital
Yeah.
instead of just brokering. And, we'll still broker, but so that's my next kind of thing that I'm working on.
Yeah.
And I also am trying to work on, with some people in our community, right?
Yeah.
On building also, some sort of syndication, we call it
Mm.
syndication, to have people invest and get
Yeah.
involved so we can start, taking down some properties, be it
Yeah.
flips or holds or development, whatever. But
Right.
again, I've never done it, right? So
Yeah.
I don't have my name isn't on the line on any properties other than the
Mhm.
house that I live in.
Yeah.
So me to a bank, I don't have really any, but I can do the lending. So
Yeah.
for me, I'll use myself as an example. For me, to get myself on the paper at some point,
Mhm.
or owning, or get myself to that point, I can offer what I know, which is lending.
Yeah.
I can
Right.
help on that side.
Right.
So that could be my skin in the game to somebody who's got the experience. Say, listen,
Yeah.
I can do X and you can do Y, and we'll both, so that's what I'm working on. I'd like to have some properties, either
Yeah.
rental or Airbnbs. Yeah, definitely. I want to have a bunch of vacation places around the
Yeah.
country.
Right.
That's what I want.
Yeah. You and I both, man, and that's kind of
That's
where
it.
I'm at too. That's the thing that I find the most promising, is that you can offer whatever knowledge that you have acquired, and it'll be useful to someone. So,
Totally. Yeah,
yeah.
no, that's the truth.
Well, that's good, John. I appreciate that. And let's see. I think my biggest question now is just what can somebody who's just starting out, what would the idea be if they wanted to get into your position, where they could offer loans and have that be their gateway into the real estate industry? What are some things that they should know, both on like the education side and in the real estate profession in general, and the networking and just running a business kind of deal?
Yeah. So your question is, how would they get to do basically what I'm doing?
Yeah, yeah, yeah. And
Yeah.
is there any pieces of knowledge that you carry with you, or books or podcasts, or I mean that could go on forever, but yeah, how does somebody
Yeah.
get to your position?
Well, I mean, I started in the mortgage business, right? In the
Yeah,
regular residential mortgage business. So I
right,
got a bunch of knowledge from there, because there's a certain amount of knowledge that you have to have and have an understanding of when you're going into the investor side.
right.
So if they desire to work for, a lender, reach out
Mhm.
to me. I can connect you with my lender or something like that.
Yep.
It's one of those things. You have to take the tests, and you have to
Mm,
do you have to do the classes and all that
yeah,
stuff to get the license. So there's that track, right? The other track is really plug in. Like,
mhm.
there's a I don't know if it's a blog or a website. I don't know. It's on Facebook. It's all over the place. It's
Yeah,
called Bigger Pockets.
right, right.
So if you plug into that community
Yep.
and you just listen and ask questions and pay attention, you'll learn so much about the investment side of the business,
Mhm.
that you'll gain a ton of knowledge there,
Yep.
just by from your computer, from your phone.
Right.
But for me, like, if somebody has experience or doesn't have experience and wants to get into to do what I'm doing for investors, to be like, all right, I want to help these guys I've got a ton of people. I want to be a loan guy like John and start my own business and do all that. Well, you just have to start somewhere. You just have to start under somebody, generally speaking. If you don't have any knowledge, I mean, you've got to gain knowledge. So I mean, that's something that I eventually will be looking for is a loan originator or two that want to learn, because there's plenty of people in my business in the residential side that when they get somebody that says, "Oh, but I want to do flips, or I want to do, rental properties," they have no idea how to do it, which is good because then they can call me and give it to me, right? But there's a lot of opportunity there, for somebody if they kind of are in front or around the right people. You can definitely learn enough to get by. But yeah, so that's what I'm looking for. I'm looking to add some people to my team. That I can kind of take under my wing and, hey, listen, you want to specialize in flips? Great. I'll teach you how to do that. It's not rocket science, you don't need a PhD.
Right.
You need a little, you need to be able to read and learn and pay attention and, but from there, it's pretty easy stuff. It's really not that difficult. Yeah.
That's awesome, man. Well, I'll keep an eye out, and I'm sure I'll be able to send some guys your way that might be looking to originate some loans. That's awesome.
I mean, it's also like, if they just want to get in the mortgage business, like I've never done this. I want to get in the mortgage business, like in terms of residential. There's plenty of companies out there that will, I shouldn't say plenty, but there are companies out there, big companies that will kind of pay you like a draw, up front to get you into like the courses and the training, you know what I mean? To be able to get you licensed.
Okay.
And then eventually you're going to have to, go 100% commission most of the time. But there are big lenders out there that will do that. They're not all looking for the experienced lender.
Yeah.
There are definitely lenders out there that'll do that. And you may find a guy like me that says, listen, I want to hire somebody that wants to be a loan assistant and start as a loan assistant and learn the business, and so there's different ways to get involved in the business just to learn. And just start at the bottom, start at the bottom. It's the way to go.
That's what I'm starting to realize as I venture out is you got to start somewhere, but all that matters is you start. And
exactly. Just do it. I mean, it's like for me, when I came back to this business, I was just like, I'm going to be successful because I'm going to outwork everybody, That's it.
Wow.
I'm going to outwork everybody. And that was my goal, is out social media post everybody, out comment on everybody, and just connect. Because it's a people business.
Right.
Everything is people.
Yeah.
Your business is people. Everyone needs to know what you do. And that's one of the biggest lessons when I was in the mortgage business the first time. My manager, he wasn't even a manager. He was more like a mentor in-house. He'd been in the business for a while. And I'd be looking at around the office. And this is where it was the wild, wild west, if you remember. These guys are all just picking up the phones and just, getting loans. I was like, wow, this is going to be easy.
Yeah.
Well, I think I told you this a while ago. He told me, where's your business cards? I brought him over to his desk. He's like, get out of here. Go hand them out to everybody. He's like, and I did. So it's all about activity. So then there wasn't really social media, right? Yeah. So it was all, I was like pumping gas. I go to the gas station. Hey, do you have a house? Oh, you do? Great. If you ever want to refinance, here's my card.
Wow.
It's like that. Go to, you're going to everybody. Everyone has to know what you do, right? Yeah. So now you've got social media, you've got Facebook, Twitter, you've got, Instagram, you've got them all.
Yeah.
You create, and you are your own brand, right? No matter what, you are your own brand. Doesn't matter what business you're in. Yeah. So you're putting out there, you have to utilize these systems for marketing. People have to know what you do. I get Facebook. I put family stuff up there, of course, because that's what I want to have up there. Yeah. But I'm also going to say, hey, listen, I got this really cool program. Trust me, you're going to see me in a little while. Put on Facebook. I have 100% financing for flips. Wow. And what that will get, I will have a conversation with at least 3 or 4 people saying, holy crap, I want to talk to you about that. So, so put it out there. No matter what you're doing or what you want to do, put it out there. Yeah. You'll get somebody to talk to about,
Wow. Yeah. That's inspiring me a bit. I think I need to better use Facebook because
you do.
There's a lot of people on there. Yeah.
You do. Trust me. Yeah. And you don't want to put it out like all day, every day. Here's me. It's just, put it out here and there, but at the end of the day, it's not, you are the brand. It's not just your podcast. It's what you do. Like you went, and this is getting a little sidetracked, but who cares? You went to a wedding this weekend.
Yeah.
Are those pictures up anywhere? Do you have any pictures of you and,
Yeah.
pop a picture up there. Like
Right.
people want to see what your life is about, and that's just a piece of it, right? Your personal side is a piece of it. Your business side's a piece of it, right? And all the other things that interest you are pieces of you. And people will follow you. They're not going to follow your business so much.
Right.
They follow you and they learn about your business.
Yeah.
And then they want to do business with you because they're like, wow, that guy's really cool. Let's go. I should call him, you know? Yeah.
Wow. And I've started to realize that the more conversations I have, it's not even numbers are important, and this is a Know Your Numbers podcast.
Yeah.
But honestly, most of these conversations end up going towards the relationship side of things and the importance of relationships. So I'm happy you touched upon that, and I'm happy that I have built a relationship with you, and will continue to build it up and take territory where we need to, and grow our businesses together, John.
Absolutely. No doubt. It takes work, but we'll get there for sure.
Amen, man. Hey, let's close with just one last question. Is there any book or book that you use or that has shaped you in your business life and has kind of inspired you, or that you think every business owner should read?
Man, I've read so many different sales books from the time that I was out of college and the guy that I worked for in the gym business, what was that? Like things like Raving Fans, like all these, Good to Great. There's so many different sales books. I mean, I got my MBA a while ago, and there's the Leadership Challenge by Krause and Posner that opened my eyes to like different things on the leadership side and how to lead people and what kind of, I'm trying to think of the book. I can't say there's one, man. I mean, I'm a fan of all those sales books. As a matter of fact, I mean, I've got this book on my desk here, Your Divine Fingerprint. I don't know if you can see it. Keith Craft. I mean, there's nuggets in there about just life and about just getting stuff done. There's Grant Cardone's 10X. Like there's like just different things that kind of change your mindset a little bit from where you're currently thinking. There's so many. I mean, it's not even, there's so much content out there. I guess for me, I've done so much in the past, like when I was younger, that I don't do as much today. Like I'll listen to podcasts here and there. I'm generally like, but it's generally more, not so much like to learn like a business strategy right now. It's more about like just mindset stuff, like the 10X book is all mindset, 10X your goals, I mean, that's, I'm not Grant Cardone or anything like that, but I've always set my goals like very, very conservatively. Everyone's afraid to fail. And that's why they're afraid to set their goals just massively. So I believe a lot in that mindset of, set your goal 10 times what you normally would. That way, if you fail at it, which most people will, you're a lot happier at failing at 900,000 than if you set it at 100,000 and you failed at 90 grand. Right. So it's all about mindset for me now, and all the different books that are out there for that. But it depends what season you're in too. If you're a W-2 guy working, there's so many. I just urge you to go and look for any type of sales books out there. There's the Napoleon Hill book. What's that?
Think and Grow Rich.
Yes, there's that. There's Robert Kiyosaki's books.
I got that right
exactly.
Here
Yes. I mean, there's so many books out there.
I know.
The beauty of it now is you can listen. You can just hit play. Buy it and hit play. That's what I like.
I gotta do that more. That's something I'm training to increase, because I do a lot of podcasts, but not so much the books. So
you know what I did? Giftology, John Ruhlin. I did. After I saw him on one of the podcasts that we were on. I bought that book, and I'm like, it just blows you away. Different minds, and again, it's a mindset thing. It's just ideas of how to create. And I think you said it a minute ago. It's so much more about relationships. Right. So I think the key to sales is relationships and networking and putting out there and working with people that are like mindseted, right? Like people that like are kind of like in the same mindset as you, but they don't always have to have the same beliefs, right?
Right.
But they have the same kind of, that you get along. You never force it. Never
Yep.
force it with somebody who doesn't want to. Listen, I've had plenty of different clients and referral partners in the past, a long time ago. I couldn't stand doing business with them.
Yeah.
It was torture,
Mhm.
But I don't do that anymore. I work
Right.
with people that I enjoy working with.
Yeah.
It's not a luxury. You still have to weed through, the good to get to the bad to get to the good.
Yep.
But that's all part of it.
Yeah.
Yeah,
Amen,
man.
man. Amen. Ain't that the truth? You close with true words, and I appreciate you for that. Well, John, this has been a pleasure. What is the best way people can connect with you? How can people get involved? Is there anything that you're looking for from the business community, the real estate community, that we can help you with?
I think I just said it. I'm looking for real estate agents that are looking for a lender that could connect with them in a different way. Like, that understands that, all right, this is about life. This isn't like what we're doing on a daily basis isn't, it's not just a quick and easy transaction, right? It's a transaction where we're working together, and you have to enjoy that transaction with the client that you're working with and the referral partner you're working with. So so if you've got if you're a real estate agent and you're looking for someone who's kind of willing to work, and I mean work for you, then give me and my team a shot. I mean, because that's really what it comes down to. Let us impress you. That's it.
And he is the hardest working man in the room, so give him a shot and give him a shout as well. John Krause, it's always a pleasure. I appreciate you. I do want to touch base with you on some more tax information that I pulled up that might be beneficial to you. So I'll shoot you a text, a voice message, but I really appreciate you taking some time to share your knowledge, and look forward to talking again soon.
Sounds good, brother.
All right.